phone. Part of the reason is with my vision. I can't see comments and things like that. So feel free to comment though, and I will respond to your comment when I'm able to, when I'm on the computer and such. But I wanted to go live, and I've just got home from work, and I want to go live about the Silicon Valley bank collapse and the Signature Bank collapse, and earlier in last week, everything that was going on with Silvergate, which is more of a crypto thing. And I waited a little bit to talk about this kind of topic because I wanted to wait till some more information came out and some more data came out about things and all that before doing it. So this is going to be a little bit longer than the shorts that I normally do on here and such, but I want to break everything down and take a deeper look at it with you guys. Again, feel free to comment, and I will respond later with my vision on the phone. I can't see the comments and stuff, so but please feel free to comment if you have any questions or thoughts. But let's dig in. A bank has four things that it does with your money. It doesn't just let your money sit there. It actually uses your money. Okay, four things. The first thing is obviously cash reserve for operations, for paying interest payments, for when somebody withdraws, giving them their money. So it has a cash reserve. The second is a government bond or treasuries. It will lend money to the government, and that's usually pretty safe, pretty steady return on the investment, and it makes money that way. The third is corporate investments, corporate bonds, and lending money to businesses and to companies. And then the final is mortgages. We go to banks, we get a loan for a mortgage. And so that's what it does with the money when you give it to them. It doesn't just sit there in a little box somewhere, and then when you come withdraw it, you get the same money back. No, it's used for different things. And I think most people know all this, but this helps explain what happened with Silicon Valley Bank specifically, and why we shouldn't be too worried about this being a broader thing. And we're going to get into this. Does affect rates and rate rises, and we're going to get into all that in a moment. But the big thing was Silicon Valley was heavily into corporate bonds. Silicon Valley Bank SVB was heavily into corporate bonds and supporting especially startups. And being in Silicon Valley, it was tech startups and these kinds of companies. Now, technology startups, they take a little while before they're profitable, before they're making money. And so you will use Uber as an example. It was either just recently or they're looking sometime this year, potentially early next year, to go profitable. But I have a feeling that just recently they went profitable. But we know how long Uber's been around, and they're only just now going profitable. That's an example. And so it takes a while for these companies to go profitable in a year. And so they were heavily in tech startups and these companies. Now, word got out that their cash reserve had started to get a little lower, and so people began to get nervous, and you had a run on the bank. People wanted to take their money out. It's not that they necessarily took the money out and put the money under a mattress somewhere. No, most cases they took it out and just moved it to a bigger bank, like JP Morgan, Morgan Stanley, some of these bigger banks. On that note, there's been some stuff going around saying it's the second biggest bank to collapse in the US. This is the second biggest bank collapse in the US, not the second biggest bank. Silicon Valley Bank, I think, was ranked number 15 as far as size goes, like 15th biggest bank in the US, not number 2. And so let's clear that up as well. Now, so understanding that these four things is what a bank does mostly, and that they were heavily into corporate bonds and supporting startups, this then takes us to the next phase. So there was a run on the bank and cash reserves ran out, and now you can get your government bonds in a decent amount of time. But when it comes to corporate bonds, especially when you've lent them to tech startups, they come and they say, hey, we need the money. And the tech startup says, we don't have the money. We're using that for payroll. We're using that to run the business. We're using that for these things. And again, this is why I recommend a diversified portfolio. And when it comes to some of these riskier assets, a smaller amount of your investment into them overall. So they said, we don't have the money because we're using it to run the business, right? Makes sense. It's all logical. And then that's basically sealed the door on Silicon Valley Bank. Now, being in Silicon Valley, there's quite a few wealthy people in that area, and so from what we understand, quite a large portion of people that banked there had over $250,000 in the bank. Now we know that the FDIC insures up to $250,000, just like ASIC does here in Australia, ASIC here in Australia. But above that, they don't. And so there's quite a bit of wealth above that in the bank. And when Signature Bank then, which is a smaller bank, again, a regional bank, again, then collapsed after people saw what was happening with SVB, when people saw that, they became nervous and so started to move funds into bigger banks and take funds out. And so Signature Bank collapsed. And then over the weekend, the federal government stepped in. The federal government stepped in and has basically said they're going to make sure people get their money. We're not 100% certain on businesses yet, and so we unfortunately may see some businesses close and close down from this and not able to make payroll and things like that. And so, but as far as I know, as far as I'm aware and have seen, the federal government is going to support as much as possible and stop this from being a domino and rolling on. Now, when we look at some of the big banks like JP Morgan, Morgan Stanley, and some of the big banks, they've got plenty of cash reserve. When we look at things, it appears that it was simply a bad management with SVB, bad management with Silicon Valley Bank, and everything that went on there. I mentioned that this does impact rates as well, and rate rises. This event is a very big deflationary event. It's a big deflationary event, meaning it's going to put pressure on inflation to come down. Now, we won't see that until we get the CPI and the PPI and the reports and stuff for next week, because essentially all these funds have been frozen and they're not moving around. So the funds have been frozen. We're not sure on the impact of employment and things like that. We'll just see what the federal government does and how they react to it. Let's just put it this way: they got a big job ahead of them. But basically now, just Tuesday last week, Fed Chair Jay Powell was saying it looks like they will have to increase rates higher and hold them higher for longer than initially anticipated, which then led to 62% of analysts and investors thinking that we're going to see a 50 basis point rate hike next week when the Federal Reserve Bank meets. When they meet next week, we're going to see a 50 basis point rate hike. Now, majority is saying, with this happening, we may not see any rate hike this month, and we'll wait then they may well wait, which I think would probably be the smart thing to do. They may well wait to see what happens, and they may be done raising rates. It may be all done, and this is why we saw a market that was really a stock market, the open of this week, that was really unsure on what to do. It was like bank collapse. What's happening with the companies that they supported, what's in their payroll and different things like this. Bank collapse is like, okay, and what will the federal government do, and how will this impact a broader thing? And then on the other side, it's like, oh, we may see no rates, yay, no more rate rises, right? So yay, and so it was a really mixed market. People were not sure on what's going to happen, so it'll be interesting. Again, we're long-term investors, so we just invest regularly, deposit regularly into our eToro account, and go there. Hey, if you haven't subscribed to the channel, I'd love for you to be a part of the YouTube community here. It is growing slowly, and I'm excited about everything. Thank you to everyone who has subscribed. We're up to 79 subscribers. Looking forward to hitting that 100, and yeah, thanks for everyone for being a part of that. If you're looking to invest and put money aside for your future, eToro is a great place to invest. If you have questions about it, comment, let me know, and I'll respond. But I do our investing on eToro. That's eToro. It is a great platform to invest on, and then if you want to see our portfolio as an open book, we do have a Patreon account. You can find me on Patreon, Nate Gratian, and everything there is completely open to everyone. We share the dollar amounts that we have invested, the dollar amounts that we invest, and where we invest, and the dividends that we receive, how much we have invested to receive those dividends, and a whole bunch of other things on there. And Patreon is 9 times out of 10 the first place that content is released as well. And so that's all for $5 a month, and you can see everything that we're doing there. But thanks for joining me here on this live, and now comes the awkward part of the live stream, where you're going to see up close to my face, where as I try to find the exit button to end the live stream, and we go and we finish the live stream off. But if you enjoyed the live stream, please give it a thumbs up. If you have questions, please comment, and we can continue the discussion in the comments section. I hope you have a great day. We'll see you around the channel.